This is going to be a quick little stock talk. Again, we have some phenomenal opportunities setting up long commons on specific names that I'm really confident in. And then we also have some short side trades that were vulnerable this week. That are a little bit speculative, like I said, but within that window of weakness. However, that window of weakness is within a window leading into the quarterly expiration on the 30th. Was that the 31st? On the 30th. So it's a little bit speculative short side and not necessarily too vulnerable in my opinion. All right, so the one trade that I do like short side this week was that lower high that we had put in on the Tuesday or Wednesday gap up. Right? We never really have like a clean vulnerable short-sided structure, but what we do have here is a lower high being put in with a dark pool and the Fed meeting print being the draw. Pretty simple concept, right? We have the signs of exhaustion, we have the OPEX, we have a low volume pop on Monday, a fade of that high on Tuesday, and then a lower high on the gap up on Wednesday, and the continuation into this Thursday gap from last week, and then into that 657 dark pool. That's a vulnerable trade, right? You have to just appropriately enter that within this lower high range and targeting the dark pool. But that's a vulnerable trade. That's really the only vulnerable short-sided trade that I see quite appropriately appealing to me at the moment. Otherwise, this UNH chart is phenomenal. We get the pop off 335. We're seeing a potential like hourly high or low put in. And this is a great commons reroll, a great options trade targeting 360 to 380. And I have nothing really more to say about this chart than I already have before and the phenomenal look of it. The second confident long opportunity that I'm a fan of is Intel. We discussed the maturity behind this campaign and the volume backing it at the pivotal point that we haven't been at within the last decade plus. The underperformance of this name relative to not only the semiconductor space, but the broader equity market in the past 2 years, right? And the preliminary signs of accumulation that kind of began in the 2024 earnings report, right? Or mid-2024, quarter two, right? And then we see this kind of climax be put in, another low be taken out in April, and then we see the consolidation happening here under that 2643 range, which is where we kind of saw that initial seller within this gap from the August report from 2024, right? So it's pretty simple when you discuss the context of this chart, right? We have the first kind of preliminary sign of a buyer here. We have this climax. We have the low taken out. We have this range kind of absorbed. We have the sweep of these lows, the subsequent progress being, what was it, 2% in 200 days, if that. .5% in 210 days. And it's a great long-term buy. And then we have this subsequent pop and consolidation underneath 2643 for a great commons trade. You have the gap up off news. But now what we have is the opportunity to trim that and then re-roll this off of a pivotal point, the 2905 spot, right? We can see the harmonic volume patterns. We can see the higher low be put in. We can see the subsequent pop on Tuesday into a higher low. Beautiful looking Tuesday candle. And then a 6.4% session, and we're now up 6.3% on the session today, right? You can target, that 32 spot, maybe 37 if you're feeling a little bit ballsy on options. I personally would just target the taking out of these highs on the options trade. The commons trade is still vulnerable up to 44 in my opinion. And the long-term investment is more than likely vulnerable up to the $50 range at least, right? So 3 trades setting up on Intel, 3 trades setting up on UNH. I discussed it beautifully, right? The options trades, the commons trades on a shorter term perspective, and the longer term buys on names that are relatively undervalued with relatively clear ranges to target and time frames within that. I mean, we are looking at 2 of the best trades we've seen in a while on the equity market, and it's beautiful. I mean, this Intel chart not only is a commons long-term buy targeting the $40 to $50 range, but it's a shorter-term commons trade with an options trade sitting up. Same concept as UNH, right? A longer-term buy, a shorter-term commons trade, and then an options trade setting up here with very clear targets, right? Like it's just beautiful how these are setting up. And it's beautiful to understand the maturity behind these campaigns and how they're established, how the hands are changed, how the accumulations are built out, how the ranges are wiped of supply, and why these are just moving with ease because that path of least resistance has essentially been established for some time now. We have forward looking relatively nice. I like commons on this, but it's not necessarily something that I would slam as much as I would slam UNH and Intel. ZOM, potentially a path of least resistance through 115, right? This is like our 5th daily test of this gap, with some relatively harmonic volume patterns on the Wednesday session. But just a commons trade I like from this range in June and July and August, targeting the full gap fill. Snow looks clean, but it's not a top focus of mine. The only other name that I'm really liking right now, I like Lyft. I like Rivian. Rivian looks really nice. We're now up like 30% since that low we put in on that Friday capitulation off news. And this is a relatively mature campaign as well with some clear targets for a shorter term commons opportunity. Lyft, I talked about Lyft in the $13 range, the change of character, the accumulation built out, and the relatively clear target being this May 2022 earnings gap. However, I would have cut a majority of the position at 18 to 19 to 20 and then 22. But if we can continue to see the kind of upper confines of this range established in late 2022 Q3, right, which we're seeing after that news gap, if we see this reclaimed with some relatively healthy volume patterns, this can push into the full gap fill at 30.76, right? So that's a trade where you have the weekly structure, you have the pretty objective risk to reward on a commons trade following this earnings report in August. You can cover some appropriately, and then you can leave the remainder of this position to get you another, this could run another like 60%, right? 45, 50%. So that's Lyft. I really do like Lyft. And Nike, another name similar to Intel, undervalued name, long-term buy, potentially being appealing here, targeting that $100 range. But the short-term commons trade, right? The accumulation that started to build out not only in June off that report with a historic volume at a relatively pivotal level, but primarily in April, right? When we saw this kind of initial low put in and this initial attempt at a base built out prior to this earnings report with this historic volume where we saw the daily accumulation that sparked the reaction and then those lows taken out in March or February and then in April and March, right? But the ease of this move, the volume backing it, and the ease of this 15% gap up in the June report is very telling, right? And we can potentially establish, even more volume backing this is honestly saying you'll get where the volume comes in, how it comes in, and what happens subsequently following that. This is a really appealing chart. COVID lows being taken out and reclaimed. This is a beaut of a buy at $60, targeting 80. But my favorite trade here setting up, because this was a little speculative into the earnings report, is going to be the $63 to $66 higher low on commons, with the first target of this position being 80, and the second being 90, and the third being 100. This is a name that I think has a lot of maturity behind this campaign as well, the $100 kind of being that eventual target, and it reminds me a lot of a name like Intel, right? And it's a little bit more of a better look than it is on like Lyft, right? This is a little speculative at all-time lows. We finally get the character change that offers a commons trade, but Nike, we're underneath the COVID lows. We're seeing the historic volume. We're seeing the character potentially flip on a weekly perspective. This is really going to be a big time watch of mine personally going forward, and I really am confident in it, right? And also wanted to discuss, right? I just noticed UNHG was beautiful, right? You have the long-term commons buy for 400 to 500. You can bid UNHG here, cover some, re-add some, and take some options. It's just a phenomenal chart with a plethora of opportunities setting up on it on UNH, right? And then the Intel. I like to break it down: long-term buy, short-term buy, options position. That's my favorite way to break it down, and I think it stands true on that UNH name, right? I like Lulu. But it's really kind of in no man's land right now, and I don't really want to touch that. Tesla made its move. AMD, I would still love that mid 170 to low 170 range for a short. Nvidia, we're pretty consolidated under this 183 range, the top that we kind of established in late July, early August, and failed on the report. But what I would love to see here is this range be wiped. But when that range is wiped, I would love for it to spark a massive change of hands, right? So when we have a resistance established, we have a notable seller within that range, right? What happens here is we have layered orders there, right? Layered sells. And when that supply is absorbed, we're going to see a massive breakout, right? And that's going to cause a lot of buying from a lot of short covering and a lot of long positions being opened, right? What that offers is the counterparty fills for a seller, right? And I don't like this chart. We don't see a sign of an accumulation up here, but very, very similar to how this report was handled in November when we have such a subsequent consolidation after and then a rally into a changing of hands. I can see a very similar potential opportunity setting up here with this newsprint on Monday and then the subsequent consolidation. Nothing I'd necessarily trade, but something that I see vulnerable potentially setting up, right? Bitcoin getting a little bit slammed as well here. I do think that this Bitcoin chart revisits sub 74,000. Probably next year. The volume patterns, the structure is very reminiscent of the 2021 top that we had put in, right? When we get the rally, we see the breakdown, we see the subsequent rally again and failure, and then we see kind of the bear market on Bitcoin in 2022 and the 3, and then the rally after this consolidation in 2024, right? So I'm definitely bearish on Bitcoin. We look at like some, MSTR. I mean, it's really insane just how beautiful this is, right? We have such a notable distribution here. MSTR doesn't necessarily look good at all. Coinbase may head for that sub 260 level. So yeah, it just a little bit of a quick gist. I do think that Apple could potentially put in its true UTAD above the all-time highs that we established in December of last year. I don't think that's really too far-fetched of an idea. I don't think a lot of these names look good at all. But quick update, right? Long on a handful of names that look really appealing. Short on a handful of names that look really appealing, but that short-sided trade is not in the vulnerable time frame and window that I'd want quite yet. So being a little bit cautious with that, right? XLP with a massive breakdown on Monday's session, right? And it's a little bit questionable. What I kind of see potentially setting up here is the third lower low of accumulation within this range, right? And this could spark a rally up to new all-time highs on XLP. So that's something I'm keeping an eye out on. Some individual names within here can potentially start setting up as well. Target, right? We're filling this COVID gap with the notable volume patterns in the November 2024 report and the April sequence, and then kind of here as well. Weird volume last week from OPEX. Procter Gamble could potentially give you something. Coca-Cola undercutting the April lows, drawing into the February earnings gap. Pepsi potentially putting in a higher low, but I want to see a little bit something different here. So quick little summarization of my broader equity market takes going forward, right? It's relatively the same. Favorite longs right now are UNH and Intel. Nike's going to set up something great. Lyft is clean, and Ford, Zom, and Rivian are relatively smaller size focuses of mine, but they still offer vulnerable opportunities on commons, right? And we have opportunities long-term, short-term, but selective opportunities on names that have been underperforming, right? Because even in a risk-off market, even in a market that underperforms, which I do think is going to inevitably happen, right? And it's not something that you can necessarily time. It's something that's going to take a while. I do think that this bubble will pop. I think that equities will underperform for the next few years. Probably going to have some excuse as far as a macroeconomic perspective on that. But, you look at 67 to 82, 67 to 82. We have something similar to that setting up potentially, right? The dot-com bubble, right? Following the dot-com bubble, where is that at? Oh, Jesus. Yeah, following the dot-com bubble, right, we had a massive reversal. We had those highs taken out. We didn't really move anywhere from 2000 to 2007. And then we had the massive crash in 2008. I still do think that something like this primarily could happen. Stagnant movement in indexes for a handful of years. Specifically the tech equity because of the outperformance and the overvaluation of these names. But I'm not putting money on that. I feel like you have to understand how to perform in that market, and you're gonna have underperformers, you're gonna have outperformers, you're gonna be able to play short, you're gonna be able to play long. You have to be selective. So pretty much it.